Hello, and welcome to carbonwhy, the channel that's catered to those who are avid lifelong learners. My channel explores the how, what, where, why the world works the way it does. Make sure to hit the like and subscribe button so that you can get notified of my next video. In this week's episode, we find out about what's happening with Bitcoin. Bitcoin has seen a lot of ups and downs over the years. January 2021 saw Bitcoin surpass $40,000 a coin. And some of the biggest names in finance say it could be even higher by the end of the year. Chamet Palihapitiya, CEO and co-founder of Social Capital, says it can reach as much as $200,000. Unlike the exponential rise and plummet Bitcoin saw back in 2017, crypto experts say that this time Bitcoin's value might just lost. According to Mike Buchela, general partner at Block Tower Capital, the 2020 lockdown and central bank's subsequent actions is what really drove most of the institutions into Bitcoin. Many people didn't get into Bitcoin seriously until March of 2020, but not Didi Tayutu. Didi and his family bet all they had on Bitcoin and bought the bulk sum of their Bitcoin holdings in 2017 when it was trading at around $900. Even as Bitcoin peaked and decreased, the family stayed invested in the volatile cryptocurrency and continued buying more coins. At Bitcoin's peak in January 2021, Didi's investment was up by roughly 4,400%, but the family didn't cash out. Even pro athletes like NFL player Russell Okung are going in on Bitcoin. Okung was the first player in the Professional Football League to essentially collect a portion of his $13 million salary in cryptocurrency, which seemed like a great idea as Bitcoin was valued at around $40,000 a coin at the start of 2021. Its value has since fallen, but analysts and experts alike say that cryptocurrency has a lot of room to run higher. Analysts at JP Morgan think Bitcoin prices could reach as high as $146,000, and the global head of CityFX Technicals says the charts indicate that Bitcoin could reach as high as $318,000 by December 2021. But the big difference between Bitcoin's rally in 2017 versus now is that institutional investors are now adopting Bitcoin. And by doing so, it legitimizes Bitcoin and erases the reputation that cryptocurrency is a risky investment. And the more people that buy and own Bitcoin, the more valuable it becomes. Cryptocurrency in 2017 was more of a retail-driven market. There was some talk about cryptocurrency then, but not the way that 2020 has seen it. But 2020 saw the market mature, with more insurance firms, asset managers, hedge funds, and corporate balance sheets joining. Data from Glassnode shows that about 95% of Bitcoin's market capitalization is kept in wallets that hold at least one Bitcoin, indicating that the vast majority of Bitcoin holders today are mostly wealthy investors rather than the smaller-scale retail speculators that made up the market a few years ago. Well-established billionaire hedge fund managers like Stanley Druckenmiller and Paul Tudor Jones have joined the Bitcoin market. Even big financial tech firms, or fintech for short, like Square and PayPal, are adding crypto products to their offerings. This kind of mainstream adoption of Bitcoin is extremely important because Bitcoin isn't backed by an asset nor backed fully by any central government. Bitcoins are only valuable because people say it is. Without that belief, Bitcoin won't have any value. So when the big wolves of Wall Street buy into cryptocurrency, it adds value because if these big guys want to buy into it, then surely it's valuable. Bitcoin can also be used to buy, sell, and price goods, and big fintech players like PayPal now allow its users to make purchases with Bitcoin. It is essentially a currency in its own right, one that was meant to replace paper currency with digital. Bitcoin also acts like a commodity, such as gold or oil. The prices are constantly fluctuating up and down, and there's a marketplace where it can be bought and sold. Bitcoin is viewed by many as a commodity. It's driven by supply and demand, and it's traded like a commodity or financial asset. Plus, in 2015, the Commodity Futures Trading Commission officially classed Bitcoin as a commodity in the US. For some, like Didi, Bitcoin is a combination. Didi sees owning Bitcoin as a way of protecting his wealth from governments and banks and being in total control of it. But even though Bitcoin can be used to buy and sell goods, with Bitcoin's sky-high projections, it's not surprising that more investors are choosing to store their Bitcoin instead. The number of accounts buying more than $1 million worth of Bitcoin and then moving it off the exchange platforms are up 180% from 2017 to 2020, according to Chain Analysis. Even in the midst of economic and geopolitical turmoil, investors are still wanting to invest in Bitcoin. JP Morgan estimates that if Bitcoin's market capital keeps growing, it could actually rival gold as a safe haven asset. A big part of why cryptocurrencies like Bitcoin are so safe is because of the technology used to build it. Blockchain is basically a digital ledger where all Bitcoin transactions are stored. And these transactions are computed by a network of people all around the world. Blockchain is so safe that in its 12 years of existence and almost $10 trillion worth of transactions, not one single entry has been fraudulent. Now compare that to the 7 to 8% false in transaction entries in a banking system. Bitcoin's decentralized nature is a big part of what gives it its value. The level of security, while being completely permissionless and allowing anyone to make a transaction, is an incredible feat. Analysts say that the Bitcoin rally that began in late 2020 has a lot to do with the fact that Bitcoin is a finite resource. There will only ever be 21 million Bitcoins in existence. Like any other cryptocurrency, it was built around the principle of a finite supply. And it's nearing its maximum threshold too. As of January 2021, the total number of mined Bitcoins is at roughly 18.6 million. The newfound surge in interest from large mainstream financial players has fueled a Bitcoin supply shortage. The demand is so high that there are not enough Bitcoins for every financial institution to have their own reserve to serve their clients or customers. Take PayPal for instance. It recently allowed its 360+ million users to buy, sell and hold Bitcoin in October 2020. And Visa was working with 25 digital currency companies on a mix of Bitcoin-related products and services. Experts say we're looking at a potentially huge supply crisis because there won't be enough new Bitcoins mined every day to fulfill the needs of major companies. According to Mike Buchela, it all comes down to a large and emerging group of institutions that have an enormous capital base that is being reallocated to the cryptocurrency space. Supply is declining and will eventually reach zero, but yet demand continues to increase exponentially. And the interest from institutional investors doesn't seem to be slowing down. More than 60% of investors surveyed by Fidelity in 2020 believe digital assets have a place in investment portfolios. As for concerns of inflation, those aren't going anywhere either. The 2020 lockdown has decimated government resources and left countries all around the world strapped for cash. The US dollar is becoming super inflated and raising taxes just isn't a good idea because of record high unemployment rates. Some countries are just printing new money instead. But Bitcoin isn't like other currencies. Its value comes from it being a limited supply of mined coins. Because there's only so little of it, each coin is extremely valuable, which makes it the perfect alternative to a depreciating US dollar and a hedge against inflation. And in places like Venezuela, where the currency appreciates daily, Bitcoin represents a stable value. The biggest Bitcoin buyers are increasingly based in the US. Mike Buchela says there's a clear bid through Western hours, which would indicate US institutions buying Bitcoin while Eastern institutions, potentially wells and mining farms and exchange operators, that are selling down during Asia hours. As Bitcoin's trading moves stateside in the US, the question many of the country's financial regulators are asking is how to regulate cryptocurrencies. Currently, Bitcoin is regulated according to how you use it and what state you live in. Heath Tarbert, Chairman and Chief Executive, Commodity Futures Trading Commission, says regulating Bitcoin is a fragmented process because there are many different financial agencies in the US at the federal and state level, and each has a particular area they regulate. The US Commodity Futures Trading Commission view Bitcoin as a commodity. The IRS sees it as property. And even though former Securities and Exchange Commission Chairman Jay Clayton made it clear that Bitcoin is not a security, the Securities and Exchange Commission does also play a role in regulating Bitcoin when it is offered to retail customers through an investment fund. Some states have become very aggressive in their regulations because there's a lot of concern about consumer protection and retail investors are getting ripped off. Others are trying to be as innovative as possible and take a different approach to regulations. But there's one main question that every regulator asks. That is, how can we balance and promote innovation and economic growth while ensuring there's no fraud, manipulation, or damage done to investors? Despite the fluctuations, standardizing crypto regulation across the US is going to be crucial as time passes. The number of people who own cryptocurrency is surprisingly small, and the Bitcoin market capital is still relatively small. It would have to quadruple to match the $2.7 trillion invested in gold. And Bitcoin is completely dwarfed by companies like Tesla. Less than 1 million people are real holders of Bitcoin. But with auctions spreading worldwide at rapid pace, things are changing fast. Bitcoin will completely revolutionize the way we view and use currency. Thank you for watching this video. If you like this video, please like and subscribe, and watch these videos that might pique your interest. Thank you for your support.